What if you could make passive income month after month using very little cash? It's expensive to just buy and hold stocks. 100 shares of Apple will cost you over 19 grand right now. And then if a recession hits or something in the world happens like a war or a pandemic, you could take a 20-30% hit very easily. In this video, I'm going to show you an option strategy that can be used to create monthly income utilizing very little cash. We will also show how to sell credit spreads, showing a couple of real examples on the option trading platform. Hey guys, Darren here. We've got a great video for you here today. I want you to take a look at a strategy that not only limits your risk, but it allows you to make money even if the stock market or the stock moves down in price a little bit. I promise we're going to dig into many detailed option trading tips and tricks and in the future videos as well. So if you haven't subscribed yet, please do that now. Also, please hit that like button and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. What is an option strategy that can be used to create monthly income and utilizes very little cash? Guys, we're talking about selling credit spreads. What is a credit spread option strategy? There are two types of credit spreads, call credit spreads and put credit spreads. So, what is a call credit spread option strategy? A call credit spread is achieved by simultaneously selling a call option and buying a call option at the higher strike price, but within the same expiration date. The max profit to be gained using this strategy is equal to the credit received when placing the trade. What is a put credit spread? A put credit spread is achieved simultaneously selling a put option and buying a put option at the lower strike price, all in the same expiration date. The max profit to be gained is equal to the credit received when placing the trade. Sounds super exciting, right? Now, this strategy of using options is used by big institutions, billionaire investors, and hedge funds. I think it's important that we understand all the different strategies and ways the rich are getting richer so that we can have the tools to do the same and do better for ourselves while doing it safely. We want to be able to do it in any market and have different options, strategies, a bag of tricks, tools, an arsenal. We want to be able to do it in any market. How do we sell a put credit spread? Let's start by going to the Tastytrade platform. Tastytrade is one of the best brokerages for trading options. It's the one that I've used for many years, and they're the guys that developed TOS, the Thinkorswim platform, and sold it to TD Ameritrade, which is now Schwab, and the one they still use today. Tastytrade is even better. Right now, you can get cash back when you open an account. I'll put a link down below, and if you do open an account and use the link and fund with at least $2,000, the channel does get a small fee, so that is much appreciated. You really need to have a couple thousand anyway to place a few different trades. All right, for today's strategy, we're going to take a look at how we sell credit spreads to create monthly income. Now, you're going to see that we use a lot less capital than buying stocks outright. Also, we're going to go through all the details very carefully so you'll know exactly how to do it. Open up your app and let's go to a company we all know and love by punching in AMD on the trade tab in the upper left. We look at the monthly option chains, and I normally like to go out about 45 days to expiration. So we click and open the August option chain by just clicking on it. Now, real quick, whenever we trade put credit spreads, we are hoping the stock price increases. And when we sell call credit spreads, we want the stock price to decrease. We always want to do our homework when trading stock options, just as if we were buying stock or selling it. I like to look at the technicals, which is the charts. In looking at the AMD chart, I see that it has had a significant drop recently. We also look at the fundamentals and also the recent news. What we're doing is we're trying to get an idea of the outlook for where the stock price will move in the near future. The fundamentals show a continual increase in revenue. They are also sitting on a huge pile of cash. We look at a few different recent articles, and here's one by the Motley Fool. These guys tend to do a pretty good job. They always provide a data-driven point of view that gives you something to think about. Then you can decide for yourself whether or not you think it makes sense and whether or not you agree. By the way, nobody really knows what's going to happen in the short term. However, you can do your homework and get a pretty good idea and then use math in your favor. In this article, they are looking at whether or not AMD is a buy right now. They indicate that they have the MI300X accelerator chip for AI and a new partnership with Microsoft Azure. So they are poised to do well with AI, just like another stock that we all know, NVIDIA. So we like the technicals, fundamentals, and the recent news. And this is why we are going to sell a put credit spread. After we open up the August option chain, we then click on the bid to sell the 105 put and the ask to buy the 100 put. By doing this, you can see we are $5 wide on the strikes. We collect $1.70, which is $170 since one option contract controls 100 shares of stock. Normally, collecting about a third the width of the strike is where I like to be on credit spreads. We are doing slightly better than that here. Switch to the curve mode. This gives us a 64% probability of profit. As long as the stock price stays above the 105 short put strike, we keep the entire $170 collected up front when we placed the trade. The max loss that we can have is the $5 width of the strikes minus the $1.70 credit collected. So it's $330. With the current stock price at 110, this would take a move down to 103.30. That's calculated by the 105 short strike minus the $1.70 credit collected. So it's a 6% move down before we even lose a penny. By the way, if the stock price does go against me, I'll just roll out to the next month, collect more premium, and keep the dream alive. I'll give the position more time to work. All right, now we know how to place a put credit spread. Let's take a look at another stock and sell a call credit spread. Let's take a look at NVIDIA. Wait a minute, you mean you're going to short the best AI stock in the world right now? Yep. Guys, one key to making money trading call credit spreads is to look at stocks that have been overbought and are at all-time highs. Yes, NVIDIA is a leader in AI, which is a growing technology. However, look at where the current stock price is. It's at all-time highs. I'm going to make the bet that in the next 45 to 50 days, it's not going to just keep skyrocketing up to the moon. Now, when we sell a put credit spread in AMD and a call credit spread in NVIDIA, we are placing what is called a pairs trade. This is something I really like to do. They are both chip stocks and both in AI, so they will likely trade together somewhat. So that means that it's likely one may lose and one may win since we're doing a put credit spread and a call credit spread. It's not likely that they'll both be losers. If they stay in the same range or NVIDIA decreases a little and AMD increases a little, then we win on both sides. So we enter NVIDIA on the option trading platform and open up the August option chain on the trade page. Remember to check out Tastytrade. We click on the bid to sell the 425 call and the ask to buy the 430 call. Switch to the curve mode and you can see the profit zone in green. You can also see in the background that I already have this trade on at the 440, 445 call credit spread, but just ignore that one for now. As long as the stock price stays below the 425 short strike price by August 18th, the expiration date, then we keep the entire $207 that we collected when we placed the trade. With the current price at $411, this would take another 4% move up before we even lost a penny. All right, guys, if you're a beginner and this sounded kind of confusing, don't worry. It did for me as well at first. We'll continue to learn in future videos and succeed together. I've put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Share the video with a friend. If you've got any questions, please let me know. Also, let me know what you're trading today. All right, thanks for watching. See you in the next one.